All right, so one thing Cole and I was talking about, I guess earlier in the year, was we want to do more how-to meetings with some of these things. So I said, well, setting up your own LLC would be a good how-to. I will point out I'm not an attorney, I'm a CPA. So if you have a legal question, you ask John. But setting up an LLC is really simple, right? And so that's what I'm going to go through today, but also how to operate it. Because LLC stands for Limited Liability Company. And so the reason we set up LLCs is to help protect our personal assets from liability, but most investors aren't running their company in the manner that they need to protect that liability. So we're going to go through some of that. So what's an LLC? It's a limited liability company. It's a separate legal entity from its owners. Now it was created, we were talking about this right before the meeting. It was created in 1977 in Wyoming, was the first when they defined it. And then since there, it's available in all 50 states or sometime around 2000. I think in Louisiana it was 91 when I think it became legal. Now the way they're taxed depends on how many owners they have or what the owners elect to do. So if you're a single member LLC, it's considered a sole proprietorship. That means if you're a plumber, it shows up on your Schedule C, and if you're a landlord, it shows up on your Schedule E. If you have more than one member, you file as a partnership, and you file a partnership return, and the partners get K-1s, and the income flows through to the partners. And then, of course, an LLC can elect to be taxed as a corporation, a taxable corporation, or it can elect to be taxed as an S corporation. And one thing really to clear up was like S corporation is a tax strategy. It's not a separate legal entity. So an entity, you have to have either an LLC or corporation that elects to be taxed as an S corp. And then, and all that means is it's a corporation whose income flows through the owners. All right, here's some of the benefits. There's liability protection, which we talked about. It's considered its own business. And that's sort of vague, but the way that is like if you have an LLC, you can point to the LLC and say, this is the business, it's running on its own. Whereas if you're in multiple businesses and the IRS gets confused because of what it is you do, and that happens in the real estate world a lot, you can point to LLCs and say, nope, I'm doing this business in this LLC and this business in LLC, I'm just the owner. And then, so, we're going to talk about that a little bit more in a bit. It can be a marketing entity, so you own the name. So if you have an active business where you have earned income, so you're a plumber, you're a flipper, something like that, you might want to market your name to the public. So you can put that name in your LLC name, whereas if you're a landlord, that's almost irrelevant. You don't need to do that. But if you come up with this cool name, but and that's where DBAs come in. Everyone uses the term DBAs. Like you just set up another LLC for that. You own that name. That LLC is owned by your company. So that's a useful, one of the uses of an LLC. It gets its own tax ID. So in my view, you should never give out your Social Security number. You should have an EIN. Now, there are cases where you need to give out your Social Security number. Obviously, you work for somebody and you get paid a W-2, they're going to need your Social Security number. But if you're an independent contractor, you should never give out your Social Security number. You need an EIN. And then, of course, it can open a bank account. So you can have multiple accounts as you need it. Now, some tax benefits of the LLCs. And these are not, the very last one is you get to deduct ordinary and necessary business expenses. Everyone always asks me, what can I deduct with an LLC? It's like anything. If it's a business expense, you can deduct it. Now, there are certain things by tax law that are not deductible. Entertainment expenses are one of those. Meals are only 50% deductible. And there's a lot of special rules for owners of businesses because we've been abusing the tax laws for so long, the IRS has special rules for us. But some things I use it for is it shows intent for the transactions of the IRS. So for instance, if you are a landlord, but you also have a flipping business, the issue is if you combine both of those in the same business, a flipper is a dealer in real estate. So a dealer is a person that buys something with the intent of reselling it in a short period of time for a profit. Well, the problem is then real estate, if you're a dealer, real estate becomes inventory. And now your houses that are rentals, is that inventory, which you can't depreciate that, you can't do 1031 exchanges, you don't get long-term capital gains. There's a lot of things that go away if you're a dealer. So you show that intent by separating those in LLCs. You can also separate income streams so you can make sure they get taxed where you need them to be taxed. I use this a lot where you got two people that are joint venturing, they're on a flip or a bunch of flips, and they already have S corps, but they want to joint venture on a new project. And it's like, okay, well, why don't we set up an LLC for this? The income flows into your S corps. The LLC is owned by your S corps. That way, you still pay your minimum salary and whatever you need, and you don't have to pay extra tax on that. You can also use it to separate earned income from passive income, which we talked about with the landlord and the flipper. And then, of course, ordinary necessary business expenses. Ordinary is basically if you're in an industry and everyone in your industry spends money on this, that's considered ordinary. It's a really vague, even though it seems like it should be a normal term, it's in the gray area. So I play with these all the time. Okay, so here's the process for creating an LLC. First, you pick the state you want to set it up in. Then you pick a unique name. You could do those in reverse. It doesn't really matter. But by you picking a unique name, you need to search the registry to make sure that it's unique, because the state won't allow you to set up a name exactly the same. But they will let you set up a name so close to another one that I think you're at threat of being sued if they do something wrong. So you want to make sure you have something really unique. I have had guys come to me and they've already wrapped their truck and they've got everything with his name they picked out, and it's not available, right? It's not available. So no, you need to check all that first. All right, then you register the LLC in the state with the Secretary of State. Then you register with the IRS to get your EIN. Then you sign an operating agreement if you have more than one member, and you should have one if you have a single member, just so you have a template there. And then, now the operating agreement could come earlier, obviously if you're the planning stuff, because it really doesn't take long to set up this. And then you open a bank account. And then you've basically got an LLC. So let's talk about picking the state. The best thing to do is, if you're operating in the state, set up an LLC in that state. Now, a lot of people come to me and say, what about setting up something in Wyoming? Because it's a tax-free state. I said, it's tax-free if you're operating in Wyoming. It's not tax-free if you're operating in Louisiana. Now, the problem if you set something up in Wyoming is that you still have to register that LLC in Louisiana. Now, you're paying for 2 registrations, and there's other problems with that. And the reason people point to Wyoming is they say, well, it has so many, because it was the first one, remember, it was the first state, has all these benefits. So if I get sued in Louisiana, they can't get at assets because they have to sue me in Wyoming. I said, that's not the way it works. If a judge says, this is what's going to happen, the guys with the guns, the sheriff's department, shows up. So no, it doesn't happen. But actually, if you're doing business in the state, you fall under the laws of Louisiana. It doesn't matter what Wyoming says. And then you can check that out with John.
I feel like that used to be a big thing in the early 90s, that everybody was doing that.
Yeah, well,
setting up in different counties and.
I mean, I still see that on the internet all the time.
Well, you see that. Well, there are law firms out west in Nevada and Utah and probably Wyoming that are promoting setting it up, because they get to charge you lots of fees every year just to maintain this whole structure. And of course, they're selling fear, not actual anything in there. So the best thing to do is start with the state you're in. Now
one thing on that note, Wyoming can be beneficial for anonymity, which I know you know.
that's the benefit for it. So yes, so the only benefit that really it has is Wyoming only requires you to have your registered agent in this thing. You can't, your name isn't there. You don't have to put your name as a member or a manager or anything else. And your registered agent doesn't release any of that information. So you can structure things using a Wyoming LLC so that you have anonymity even in Louisiana. So I've been doing that with clients. In fact, I had a client call me last week. He's trying to open a bank account refinance one of his buildings. And we set him up a Wyoming LLC because he wanted anonymity and all this stuff. And the title company that was using this was in Baton Rouge, was like, he didn't understand this stuff. It's like, how is it not listed and stuff? I'm going, oh my God. So I told him, I said, well, it's the operating agreement. He needs to give you an operating agreement. And he called me up, Bob, where do I get an operating agreement? I said, okay, we'll get you an operating agreement. Right. And so picking the LLC name. Now, we talked about this briefly, but you see a lot of companies set up when they own real estate. It's like 123 Main Street LLC. Well, that's just an easy thing. To me, that says, I own this property, come sue me, right? So for owning real estate, I like to pick up something like, I don't know, Purple Pigeons Eating or something. And it's like, what the hell is that? It's like, no one can look at the name and know what it is. Unless it's really stupid strange, you probably say they probably own something big. But I don't like to use the name holding. I don't like to use the word real estate. I don't like to use properties. I don't like to use anything that describes the fact that I have real estate in it. In fact, my favorite thing to do is pull up Google Translate, type in a phrase, a sentence, and pick another language. And if I can pronounce it and remember how to spell it, that's my LLC name. So once you've got your name and you've searched the Secretary of State database to make sure it's unique, then you create an account on the Secretary of State website for that state. And then usually there's a link that says start your business, and then you start an application. Each state's a little bit different, but that's pretty much the state. So one of the things you want to do is you want to pick manager managed LLC. There's manager managed and there's member managed. This one, it doesn't really matter if you're a single member owner, whether it's one or the other, but if you have multiple members, it makes a difference, because if you're member managed, then that member could have the authority to go sign on behalf of the LLC without your authority. And so the manager also can be fired. So it doesn't actually the manager doesn't even have to be a member. So it's like a corporation where you have a president or whatever. But wherever it's manager, if it's member managed, the person has to be a member. Now you can always change that, I guess, in articles, but it's easier to pick that when you start. And that way also, I usually list myself as manager on this stuff. I don't even say that I'm a member on the LLC on the websites. All the states pretty much require a registered agent. A registered agent is a person that where the sheriff shows up when you get sued, and they want someone with a physical address in the state. There are a lot of law firms do this for a lot of clients. There's firms that if you set up, for instance, in Wyoming, you have to hire someone to be a registered agent. Some of the firms that help set them up, that's one of the things they do. And a lot of the companies that do this, they have offices in every state so that they can do that for people. So you can even have a registered agent in Louisiana. So if you want anonymity, you can't be the registered agent, but you can be your own registered agent in the state that you live in. I tell people, if your grandma lives in Mississippi and you're in Louisiana, you set up, she can be your registered agent. But if you don't want the sheriff to show up at her door when you get sued, you're going to want to find someone else, right? So, all right, so you'll get there. Those are questionnaires. Like some of these are questions I get. People will be filling it out and they'll come back to me. So there's a question, what's the purpose of the LLC? Well, any legal purpose is what you want to put. That's the default. Usually it says it can be any legal purpose, and you put that in there. Now, depending on what you're actually truly doing with your LLC, the IRS, for instance, has certain things you have to put this language in for that. So for opportunity zones, which was a big deal a few years ago, if you want to set up a qualified opportunity zone fund, which was just an LLC, you had to put all that language in there. Obviously, if you're setting up a nonprofit, usually use a corporation for that, you would put in there that the purpose is to be a nonprofit. Each state has different rules for that, but any legal purpose is good. I do see things. I saw one the other day. Someone said they put their purpose was real estate. It didn't say real estate investing estate. It didn't say real estate. It just said real estate. Okay, what does that mean? The issue where this comes in is if you actually start doing something different and you get sued, and they see that your purpose is you're doing something different, it's like, oh, wow, you just cracked open the door, we might be able to get through it. So the purpose of this is so to keep your liability intact. The duration that comes in there, how long is your LLC going to be in business? Well, just put perpetual. Now on Louisiana's website it says can be perpetual. So Louisiana actually helps you, but other states they don't. They just have a blank. So in Louisiana specifically, not all states have this, but you get to on the pages like which taxes will your LLC pay? Your answer is always None of the above. And I mean, the taxes are corporate and franchise. It's just the buttons is payroll tax and sales tax. So I've seen people set up stuff and they've checked the box. Well, I don't know if I'm going to need to do sales tax. Let me check it anyway. Guess what? They're filing sales tax returns for the rest of their life for zero because they got to send in. Otherwise, they get billed $1,000.
I just set up an LLC. They wouldn't let me choose none of the above. They made me choose one of the
So you said you answered a question earlier that probably affected that. I don't know, but yeah. And if that's the case, then you know, I don't know what you would do.
Can we fix all that, like when you do the annual report? Like if you were to set it up wrong the first time?
Well, the annual report
Just this
is a little bit different, but yeah. So sometimes when you ask the question you have earlier may require it because you've indicated that you're going to be.
Yeah, real estate. So I did actually put real estate or something specific to real estate.
Well, maybe their computer picked up. I don't know. But I haven't come across that, and I've set up hundreds of companies. All right, you'll get to a page where it'll ask for the NAICS code, which is it's Standard Industrial Code, basically is what it is. And it can be anything you want. Just pick a number. Who cares? It's for statistical tracking. You know.
Google.
You can. You can Google it if you're doing something specific. You know, you can Google it's like NAICS code for. And it pops up.
The purpose of the LLC
Yeah, this is statistical. They want to know how many people set up businesses this month or this year under as realtors, how many set up. That's all it is. You know, I have fun and change it all over the place. And of course, when you do the same, when you file a tax return, it asks for the same code, but it doesn't have to be the same code. You can have a different code every year. It doesn't really matter. Remember, your purpose of your business is any legal purpose. Well, I've changed my mind. This year I'm a plumber. Next year I'm an architect. Next year, it's like, who cares? Now, there is a code that's 531-390, which is real estate other. Most people, I just stick them in there. What are they doing? When they're setting up something, what are we doing? It's like, hell, just put it there. Well, it doesn't really matter. But you can pick anything you want. All right. So when you complete the application, then once you go through that, you complete the application, you pay the fee, and you download your articles of organization or the registration certificate, whatever the state calls it. That's the document you're going to need to show people, to show you're in business. You can usually go back and download those anytime you want. After a period of time, you may have to pay a fee to get a copy of it. So it's just easy to do it right then. Then you go to irs.gov to get your EIN. And you make sure you go to irs.gov because there's a lot of people faking themselves as IRS to sell you an EIN. If you have to pay money for it, you're on the wrong website. And then that's irs.gov's main site. There's a search box. You type in EIN. And it takes you to the page, and you click on the link that says apply for an EIN. Now, it might say employer identification number, but it used to have a little button. I looked today, and it's just a link. So you click on that. And it's going to ask you when you say what kind of business, you put in there limited liability company, and it goes, okay, how many members you're going to have? Your answer is 1. Because it's going to set it up as a single member LLC. The IRS does not look for a tax return. Remember, back in the earlier slide, you're a sole proprietor. It's disregarded for tax purposes. So the IRS isn't looking for a tax return. And because you can always add members. In fact, as soon as you get the EIN finished, it's like, okay, let's do the operating agreement. Now we have 4 members. Because then when you file your tax return, that's what determines the stuff. What you don't want is the IRS looking for you to file a tax return when you're not ready to actually do business. And I've had so many people that set up membership returns and they did nothing in the year. They set it up for an idea, didn't get started. You know, at this point, sometimes if they didn't do any activity at all, we don't have to file a tax return. But if they spent some money and they did some activity, then now they've got to file a separate tax return. They got to get a K-1. Now, husband and wife, spouses don't in community property states like Louisiana, they're a single member LLC. And if you even put 2 and you say that your address is in Louisiana, they say, oh, are they spouses? Do you want to file as a disregarded? It asks you the question. The easiest thing is just put 1. You can add everyone later. Now, this is very important. When you get to the end of the process, you're going to get a web page and going to say your EIN number is this. And a lot of people just take screenshots of it. There's a link right below that gives you your actual official letter. And the IRS will not mail that to you. You need your official letter. Because if you don't get it, you're going to get to a point where they're going to say, we need your letter. and they won't accept a screenshot from the IRS, because that could be anybody's screenshot, not your letter. And then, and now you're gonna have to write the IRS request that's gonna take months. So if you're trying to get a license, or you're trying to get something where they're looking for those official documents, you're SOL. So make sure that when you get to the end of the page, you click that link, you download that. So now you have your articles of organization and you have your EIN letter. And make sure you save that in a safe place. It's so surprising to people that don't know, can't find their EIN letter or their articles. The articles are easier to get. All right, then you open a checking account. So you take that articles of organization EIN letter to a bank and you open an account. And I have so many people saying, do I really need an account? Yes, you really need an account. And just put $100 in it, whatever the minimum is, find a bank that doesn't charge fees, and then open an account. And then you don't have to use the account immediately, but you have the account there. So now you're officially in business. And then the operating agreement. For a single member LLC, it's really simple. You can write it on a napkin because it's you. You're making all the damn decisions, right? But when you have multi-members, you go to John, because the thing is like, it's usually everyone's all happy in the beginning. Yeah, we're going to do this and all this stuff. But when they decide it's time to split up, it's usually not happy anymore. And so now if your partner is your spouse and y'all decide to split up, your operating agreement ain't going to do you a damn bit of good. Heard?
I'll make it important, if you or any of your partners are married, have their spouses, even if they're not members, sign as intervening, because that will completely screw up the divorce proceeding.
Yeah. So that's why you go to John, because you're saying, okay, I have this. And of course, if you start as a single member, you decide to bring in a partner, then you're going to need an operating agreement. And you can change your operating agreement every day if you want. Never do it, because it's like, you're just signing something. Yep, effective today. This is the new operating agreement. But it's good to have it as one of your corporate documents. If you're a single member LLC, a lot of people don't bother with it. It's like, but sometimes, like for instance, we were talking about the funding company that we were doing. It's like I had to do, and I have an LLC that's a holding company that owns an LLC that owned the property I was buying and refinancing. So I sent them all the documents for the sub LLC, and then they call back and say, we need operating agreement and stuff for this other LLC. I went, no, you mean this one, right? He said, no, we need it too, because we need to make sure you have the authority to sign on behalf, because it was the member, right? You have the authority to sign. It's like, so I had to go and pull up an operating agreement, fill it all in, and go to my wife and say, okay, here, sign this. I got to fax this up. Okay. So we have an operating agreement for everything now. All right. I put part 2 here so I remember that I'm changing sort of thing. Now we're going to talk about, that's setting up your LLC. Now we're going to talk about operating it to maximize your liability protection. Yes?
Quick question on setting up. It sounds like to me you could just do this on your own.
15
Yes.
I mean,
Yes.
1 or 2 nights ago.
Huh?
Like 15 minutes, yeah.
Yeah, okay.
Yeah, it depends on the state, but yes, for the most part you can. And then sometimes it's convenient just to have your attorney set it up, or you're working on a big project. It's just, they just do it as part of everything and make sure all the documents are there.
I can speak for Arena, we're partnered with them, but like your legal Zooms and all that, that's fine. But there's a lot of things that you can write into operating agreements that like websites generally aren't gonna add to that, like special provisions. Like for our company, we have a lot of provisions that are on the media related side that maybe LegalZoom or other of those things might not really take into account. So you get a lot more of a personalized approach for that. And for
Yeah.
us, like it's very helpful to have specific provisions on deliverables and all sorts of stuff. And that's where using an attorney really comes in handy.
Yeah, like I said, it's essential for a multi-member LLC for sure. For a single-member LLC, if it's just yours, it's like,
I'll tell people sometimes, like, look, come sit next to me, I'll do it with you, and it won't cost you anything, just so that you don't have to bother me the next time you get it.
right.
Yeah, right, because it's
Do it once, you got it.
Okay, so now once you have the LLC set up, you really have to operate it in a certain way to maximize your liability protection, because there's what's called out there because of the corporate stuff is piercing the corporate veil. And so that means if you don't operate in a certain way, they can get through your LLC to you. The whole purpose of setting up the LLC is to keep you separated from from the business. So we're going to talk about a few of those things. Here's some essential components you're going to have. You must have a separate bank account for each LLC. You must keep a separate set of books for each LLC. Your LLC must be adequately capitalized. We'll talk about that in a second. And your LLC must follow your operating agreement, if you have one. If you don't have one, that's a mark against you. And you must not commit fraud. That seems like an obvious thing, but fraud could be as simple as backdating documents to the last calendar year or before this transaction that you're getting sued on and stuff. And it's like, once you do that, you've lost, because you've just now, your purpose of your LLC is any legal purpose. You committed fraud, that's illegal. We're coming after you. So you got to keep some of these things in mind. The capitalization thing is a biggie. If you're not adequately capitalized, then you can't defend yourself in a lawsuit, and the courts they have done this in other states, and point at it and come at you. Now, there's two ways to capitalize it. You have retained earnings in there. You have money. It's got assets. It's got money. It can pay its bills like regular. In real estate, we have a tendency to refinance the properties and suck that cash out of it. We're upside down. So we're not capitalized at all. There's debt, there's no capital. But you can use insurance as long as you have the insurance to cover anything that happens. So you need to make sure you have the right amount of insurance. Most insurance policies have a $300,000 limit for liability, which is really what we're looking at here. And the issue with that is that that's not really enough for most people, or especially most business owners. It actually doesn't cost that much more to go up higher. You just have to have things in place. Because liability insurance relatively is cheap. What everyone's bitching about for the insurance we have now, it's the property side, because we keep replacing our roofs every 2 years. So insurance companies don't like to pay for that. But I have a lot of people that will set up LLCs for the liability protection, and they won't keep a separate set of books. Or worse, they'll have a QuickBooks account, and QuickBooks says, oh yeah, you can track multiple companies in one set of books. It's like, well, your liability protection goes away, and if you get audited, the IRS has access to everything now. You know, it's like you're saving $99 a month. Yeah, maybe you should look at a different software solution then. You know, there's other things out there that you could do. Anyway, and a lot of people just hate the fact that they have to move money around from all these different accounts. It's like, well, you know, that's the different banks. So anyway, these are the basic things. We're going to go through a few of them. So commingling. Commingling is where you're paying your personal bills with the company's money. That's a no-no, because that basically says you're not treating the company as a separate entity from you, and you're showing the world that you're not doing that. So therefore, when you get sued, if they find that, they're going, okay, we can come in after you. The best way to handle that is if you need money, you transfer funds out of the business to you. You can pay yourself distributions, wages, reimbursements, whatever it is, that's okay. Because you're a member, it says that in the operating agreement, you can do that. And then you pay that bill. So the same thing is if you have two LLCs, you don't want to transfer money between those LLCs. You can do that, but you have to consider that, well, now you need a promissory note, you need a resolution in one LLC saying we can borrow from the other LLC, and a resolution in the other LLC saying we can lend to this LLC. It's just too much paperwork. Just transfer money to yourself and then make a contribution to the other LLC. It just goes through you. When I started setting up the holding companies and all this for my wife, I had to draw her a chart so she can figure out, okay, how do I get money from this property over to this property? Well, you got to go up through this place, through my pocket, back into this place. And it's like the whole thing. It's like we have this structure. It's like you got to follow it. So that's the commingling part. This part was sort of short, but you know the conclusion is the purpose of LLCs is for liability protection. People think it's for doing taxes, but it's like it helps with taxes, but really the purpose is liability protection. They're easy to set up, and they're also easy to mess up, since we just showed. And most of my clients are bordering on the messing up because they're trying to take shortcuts to do things. It's like, you got to stop doing that. And just keep your LLC transactions separate from yourself and your other LLCs. And that's basically how to set up and operate an LLC. Yes?
I've got a question. So, in your opinion, from an investor standpoint, investing in real estate, how many properties should I acquire before thinking about transferring them to an LLC? And when I do transfer them to an LLC, will I have to pay off the rest of that loan to then
Okay.
transfer it?
Well, those are good questions. So when you own a property in your own name, you have no liability protection. So now you have, well, so if someone slips and falls with that property, they can sue you personally for everything else you have. So it's best to put your rental properties or your income properties in an LLC. Some people ask me, should I put my residence LLC? It's like, no, because you lose too many benefits. Keep that in your name until you decide to transfer it and make it a rental, right? And then even when I did that with the last residence that I had, I waited 2 years before I did that because I didn't want to lose my ability to sell it tax-free for the tax-free gain, and I wanted to make sure it was going to make a good rental. It's one of my best properties, so it's like it's a rental forever. But for everything else, I buy them in an LLC. I set up the LLC first, and they go right into the LLC. Now, financing, I like to do creative stuff, so I don't really use banks. Other than I'll buy something subject to that's using a bank's money, but I didn't get the bank's permission for that. And that's where if you transfer stuff into an LLC, you don't have to pay off that loan. Technically, there's a due on sale clause in your mortgage, and the bank might say, well, you sold the business. Like, no, I didn't. I transferred it into an LLC. You can say, well, I'll transfer it out. You know, I've had people do that. You don't want to transfer things in and out of LLC because that also degrades the fact that you're not treating any separate for yourself. Right. There are a lot of mortgage guys that say, oh, well, I can't finance for you, but if you transfer it out of your LLC, we can refinance it, and then you can put it back in. Mm-hmm. Well, then if you do that a lot, you're showing the world that I'm not treating this any different from me. So you have to keep that in mind, and that stuff. But you can transfer them into the LLC without any problem. It's just like selling it subject to someone else, except you're selling it to your own LLC.
And then I have another question is, how many properties should you put in one LLC? Isn't there like a limit on, after you reach a certain point, the government starts taxing it differently?
No. You can have any number of any number of properties in an LLC. The issue is if someone slips and falls at one of them, they can't get at you, but they can get at everything else in your LLC.
You also
So
greatly limit your potential marketability. If you have a portfolio in one LLC and you got someone who wants to come buy one part of it, and they might have better means of getting financing through maybe a refinance, so you can, instead of selling them the house, you could potentially sell them the LLC interest, and they can refinance it through there. But you can't really do that if you start piling in all your assets in one LLC, because then you're gonna have to move those out because you don't want to sell an LLC interest to somebody who just wants one house, right? And then so then you're moving a whole bunch of properties out.
What would you say a number?
One.
One for every property?
Every property, different LLC?
well, yeah, that's how I have it set up. Now, in this case, what I would do is see if it's possible. I'd say, why don't we just set up an LLC and quit claiming it over to it? The only issue is that there's seasoning and stuff like that, right? So you have to think about how they're financing
We did
it.
have a shelf though, so that worked.
Yeah.
We were able to kind of-
But, so I like to do one per LLC. But for those clients who don't want to have that many LLCs and banking accounts and all the other stuff, I say, well, you put the number in your LLC that you're comfortable with. It's a liability issue. You know, if you set a limit at $500,000 worth of property, $1 million worth of property, and you buy an insurance for it, just realize that if someone slips and falls, they're all now in the mix. Now, when it comes to liability protection also, as far as inside that, mortgages also, they take precedence. So if someone gets a judgment against the LLC and attaches it to the property, it's going to be behind the mortgage. They would have to foreclose out that mortgage. Now, if you've almost paid off that mortgage, it's going away because that's going to probably happen. But yeah, so it's just the number of properties that you want to keep. The other issue with putting too many in is what you can do is you can go to a bank and you can say, okay, I want to get like a business line of credit and I want to base it on all of these in the LLC. They have 3 properties, they're all rental income. Sure, you get a bigger dollar amount of a line of credit. Now you've paid off the mortgage and stuff, but if you do want to sell just one of them, you got to pay off the whole line of credit, or you got to get special permission from the bank to release that one property, which means most of the proceeds from that sale goes to the bank. They'll say, sure, sell that one, pay down the line of credit. And then they also lower your line of credit limit because you just got rid of one of your assets. By keeping them separate, you know, you have more flexibility when it really comes to that.
Gotcha.
Way easier for the accountant too, I guess, when it's all separate like that.
Say that again?
I said easier for your accountant too, when it's all separate. Each property's in a separate.
If you're
LLC.
keeping separate books,
If you're
yes.
Organized, yeah.
Yeah, if you're organized.
Yeah,
Who is that organized?
Yeah, I don't know. I would like to meet them.
The accountant.
right.
I guess
So,
I guess I didn't-
yeah. No, it's like we have clients that do a really good job, and we have other clients that give us all their day and saying, this is for all my rentals. It's like, we got one of those today we're working on. It's like, okay, which one is it? And so, and one of the times we did it last time, I said, just allocate it. Because it's all going to show up on the same tax return. We'll just stick it in there. If the IRS comes and argues that this number was too low, I'm going, well, that one was, you know. We allocate on some basis. Usually they have the rents. They're tracking that because they know what tenants are. But when they're spending money, if they're just writing out with a single checking account, at the end of the year, they didn't remember because they didn't make notes, right?
What are
So.
those tools that you recommend for like accounting for rental? I still use Excel, but
So, well, Stessa is a really good,
what is it?
Stessa, S-T-E-S-S-A. It's like asset spelled backwards, but it used to be free. It's free at the very basic level now, and they charge you, it's not that much more expensive on a monthly basis, a lot cheaper than QuickBooks, but it's designed for rentals. And it's really good. If you have an operating business, like you're renting equipment, then you can use wave accounting. Is also something free. It doesn't have, you can't separate business lines or whatever. You can with chart of accounts, which gets cumbersome, but with Stessa, you run a report and it says, here's your P&L by property. That's really what you want to see. If you're managing it, you want to say, how is this property is this property even making me money? You want to be able to do that. QuickBooks can do that. They call them classes, and you set those up. But QuickBooks now is like, to get that ability, it's $100 a month. And so it's every month it's $10 more. It's like, I don't know when they're going to stop. It's just crazy expensive. And then the programmers in the back end are making it less and less usable, it seems, every month. So it's like, they keep changing things. You know, it's like, basically, it's like, if it's your favorite feature, it's going away.
It's going away.
You know, every time I log into QuickBooks Online, it looks different to me. There's something, they've seen something. But most online software is that way. They're always upgrading and coming up with different things. But Stessa and Wave are the two you can use. Stessa is better for landlord, yes.
From your viewpoint, a simple LLC, does it have to have its own tax return every year?
If it's owned by one person, no. The IRS won't actually allow it. So unless it's an S corp, so you can have a single member LLC that elects to be taxed as an S corp, requires a tax return. But if you have an LLC and you have one LLC, you're the only member and you have one rental property in it, you just report that rental property on your Schedule E. But legally, you still have that LLC protection as long as you're doing all the stuff you need to maintain that. Yeah. Any other questions?
Hire attorneys.
Yes.
I want to ask about, well, rental vehicles, you know, 'cause we need vehicles to go around and stuff like, so, you know, we can just write up on our business, I know.
So when you're,
Get a vehicle.
well, remember we talked about ordinary and necessary. Well, as a landlord, owning a truck is ordinary because other landlords have trucks, and it's necessary because you got to drive around and maintain your properties, right? So you hit that, so it's deductible. The problem is you're also the owner of the company, and you might use it personally. And so now you have to track your mileage to break out what's business use and what's for personal use. And if you just pick a number like 80%, well, then your tax preparer might go, okay, well, how many miles you drive for the whole year? I drove 100,000 miles. Okay, that's 80,000 miles. We'll go with that. But when you get audited and IRS sees that you have mileage or any kind of truck expenses, they're going to say, let me see your mileage log. And if you can't produce that, you just lost the audit. because you don't have a document that was necessary for you to actually prepare your taxes. So that means by definition, you're lying to the IRS because you have no way of knowing what that is. But if you have a mileage log, you show it to them, they go away. I mean, at least they leave that alone, they go with what the other purpose is. I use Mile IQ, which is an app that tracks everywhere you go. I haven't tested getting on a bicycle and riding around really fast if it gives me stuff, but I'm pretty sure it would.
It does, a boat, I mean, anything.
I mean, I've been on an airplane flying to Dallas. I get off and I'm going, oh,
Whoa,
I just drove all the way. Yeah.
Business expense. But you just swipe right.
But
business,
so
swipe
then
left.
once you have once you have that business use versus personal use, then all the expenses of your vehicle could be deductible at your business use percent. Now, if you write off the vehicle, which a lot of people, they want to buy a truck so they can write it off. And it's like, if you do that, that's called accelerated depreciation. You depreciate it all in 1 year. That's what the write-off is. And then when you do that, you're required to use track your actual expenses for the life of that truck. You can't go back and use mileage. So the next year you might say, I might get a better mileage deduction with mileage, but you wrote off the truck already because mileage has depreciation in it, and that would be like double dipping, so the IRS doesn't allow that. If you have a vehicle that you only use 100% for business, because if you have two vehicles, plausibly you could only drive this one for business. You still need to really track the mileage, but especially if you have something where you have it parked in a certain location, which is a business location, you park it, it could be your home, because if you have a home office, that's a business location. And then you only use that truck when you go out and you do, stuff for your rental. And then, but still, because it's a personal vehicle, it's, you gotta track it. So, but yeah, it's like, I mean, you can get,
Track it or have two separate vehicles.
well, the IRS is gonna, if they see a vehicle deduction on your tax return and and you own it and they're auditing you, they're gonna ask you for your mileage log. And if you don't have a mileage log, like I said, they might, at best case, just say, well, none of the vehicle deductions are valid. We're gonna not do it.
Is there a certain amount of miles that you get deducted, or is it just any miles?
Just whatever you drive, yeah.
You drive, okay.
I mean, your realtors drive around a lot, for instance. So they have a really high, when a realtor gives me stuff and they don't give me mileage, I'm going, where's your mileage, right? And it's like, now a lot of them also buy these expensive SUVs that weigh over 6,000 pounds and they want to write those off.
As a wholesaler and I do riding for dollars, I ride a lot.
Yeah,
That's
so you
right.
just document that. You
You need to
know,
get this out.
Hear from that.
get Mile IQ and just start letting it track for you. And then you swipe it. It's tracking your GPS. It's
Yeah,
wherever
it
you're
tracks
moving.
Every time I crank my car and move it somewhere. And then
Yeah,
if I
once you
wanna-
start moving faster than a certain speed, it assumes you're in a vehicle. That's why I said a bicycle.
Yeah.
And then,
It's an app that it's attached to you, it's attached to one vehicle.
It's just
no,
attached
you
to
can
me.
have two vehicles in there. You can have multiple vehicles in there, and then you can say which one you're in. But you,
600 times.
yeah, so you can key in notes in Mile IQ, and then so if you're using multiple vehicles, you can also pick which vehicle it is that you're using, and then you just have to put that in there before you swipe it, whether it's business or personal. One of the cool things about Mile IQ is after you've made a trip 3 times in a row, in any period of time, it says, hey, you've done this 3 times and you swiped it business. You always want to swipe it business, and you can click yes, and you never have to swipe that again. It's always going to be business, right? But if you did that, and if I did that in my Camry, and then now I'm driving around my wife's Highlander, it's going to think it's the Camry, so the mile is going to be off if I'm tracking 2 vehicles.
So trucks and trailers, you said something about 6,000 pounds or somebody.
Yeah,
It's like section 179 or something.
well, that's a depreciation code. But if you buy a vehicle that weighs 6,000, has gross vehicle weight rating, so or more, it's considered equipment, and then you can expense it 100% using section 179, but you have to have profits to do that. Or bonus depreciation, you can depreciate up to that. Right, but if it's less than 6,000, it's 5,999 or less, it's considered a luxury auto, and at 5 years, you might get some extra little bonus the first year, but it's not the full amount.
Now, should that vehicle be in the name of the LLC through the state? Is there any stipulation for that, or?
I think it could be just a member.
No, it can be in your name,
Okay.
The LLC is reimbursing you for the expenses,
Is there
essentially.
anything other than liability protection, a reason to have a vehicle in that name? Or?
No, I mean, the issue with putting a vehicle in LLC name is now you've got to get commercial auto liability, which is more expensive than personal. Now, if you've got a bunch of guys driving around in your trucks, like you're a plumber, AC guy or whatever, you're going to have to buy the commercial auto policy anyway. Might as well put those trucks in the business name.
I see.
The other issue with putting a truck in the business name with an LLC, you're back to, okay, you get in an accident with a truck, the house goes away. And there's a higher probability of you getting in an accident with your vehicle than someone tripping and falling on your house and getting sued for it. So you want to be careful if it's real estate putting those in there. But if it's an active business, it's like, it's just part of the course.
Only have one LLC per house.
Yeah, you have one LLC per vehicle too if you want. But it'd be hard to say because it may not be capitalized enough to withstand.
So you still get the benefit of the tax without being in the name. It can be
Yes.
in the name, so why, I understand unless you have separate individual driving.
Yeah. The only issue is if you take the big depreciation on the vehicle one year and the next year you're not using it as much, or it's not 100% business, or if it's less than 50% business, I should say, now you got to pay all that depreciation back. So there's a lot of guys that buy a vehicle at the very end of the year and drive it only 100% for business so they can get the write-off. Next year their wife's driving it, and then she's maybe does it something and it's 25%. And guess what? The next year they're paying the tax on it. So I tell them that up front. I said, oh, by the way, here's what's going to happen if you switch it. So either if you want to write it off, you got to keep playing the game and make sure that it's 51% or better for business.
So, aside of the real estate, the guys that have side hustles or what have you, more of an LLC question. At what point of, do you think that, word this? At what point of success with your side hustle do you think you should turn that into an LLC? Where does it benefit you?
So if you have a side hustle, you just have you're earning extra money doing carpentry or doing handyman work or something like that. You get all the tax write-offs that you would get whether or not you had the LLC. So from a tax standpoint, it doesn't matter. Where it benefits you is at the liability protection. So if you're at someone else's property or whatever, and the business, you would want to also carry insurance for, liability, so that if your business does get sued, they're not suing you personally and taking your home away. They're inside that LLC. But if you just have an LLC set up and it has a checking account that you keep $100 in, and you're going out there and doing it, you're not capitalized, and you don't have any insurance. You're fully at risk. There's no reason to even have an LLC unless you want to use it to market. It's the marketing name.
It's amazing in my experience, like with people kind of following up on that question, because people ask that, it's like, look, is this a business to you or not? And if they say yes, then it's the mental kind of change, and when you set up an LLC and start operating that thing as a business, it kind of, consciously or otherwise, gives you a boost in terms of self-legitimizing and outwardly facing legitimizing type of enterprise. So, so not to say that just putting an LLC is going to mean you're going to make $1 million, right? But I mean, whatever type of little momentum that adds, or the context in which you're operating it, we've seen people kind of, it's the lights turn on in their eyes.
Yeah, well, that's a good point. It makes it legitimate, if nothing else, just in your head. And then maybe you'll work a little harder at trying to grow that business or making a profit or whatever. And, it's just one of those things.
At least cover the annual report.
That's it. It's not a hot side hustle unless you can cover it.
Yeah.
Yeah.
I don't do that in my report. I feel like I can click any button and close my eyes and I'm done in 2.5 minutes.
And it costs you $100.
Yeah.
$60.
So
That's
what's the
it.
number one thing you see when people are setting up their LLCs that they get wrong? They're like contacting you about what did they do wrong?
So, well, they set up a taxable corporation, not an LLC. Or they set up an entity wrong because they don't really know. Now, one thing that's Also, if you're setting up an LLC or a corporation, part of its name is LLC at the end. Legally, it's going to be that. So when you go to the IRS and set up an EIN, some people just put in, like Norton Accounting Services. Don't put the LLC. Well, now your letter comes. It doesn't have the entity on it. The IRS doesn't mention it anywhere. It's like, what the hell are you? I don't know what you set up with the IRS. Now, in some cases, the biggest errors are when they're on the IRS website because they click the wrong button. Next thing the IRS is looking for, you're now a taxable corporation, but you set up an LLC at the state, and that means we've got to file all this extra paperwork to fix that. But when they're setting up the business, it's really, you know, the one thing I do see people that they'll set up the mistake I make is that they start using the name before they've set up an LLC and made sure that name's available. And I've had so many clients do this. Most of them are contractors or in some contracting offshoot or some trade. And then because they think this cool name, it sounds great, and it turns out someone took that 20 years ago, right? And they just happened to be up in Shreveport. You haven't heard about them because they're up there. That's the biggest thing. The other thing is naming your LLC too closely to another entity, you know. And that's why I like to search it. And I have clients that have picked names that are, I mean, so close in meaning one company was set up 20 years ago and it's incorporated, and then now you're setting up it as an LLC. The computer allows you to do that. And in Louisiana, I don't think a person looks at the files. In Texas and Florida, it takes a week to get it back in those states because someone is actually physically looking at it to make sure you have everything right. Mississippi is like instantaneous. If it's not, if you leave a period off of INC, but you put INC, I'm pretty sure it'll pass it, you know? And then when you get sued because the other corporation is in a lawsuit, now you may get released from it, but you're going to spend a lot of legal fees to get released. So the names are usually big things. People don't think a lot about what the name should be. Now, some cases, if you're doing marketing, because you're public facing, so you're a consumer, you know, plumber, you're using that, or some sort of trade, you're going to want a name that sort of says something plumbing, right? Or something like that, so that when someone sees your name, they know what you do. Even though your purpose still says any legal purpose. I have a client who's got a company that's, you know, his name, barbershop. He mows grass. And he's investing in real estate with that thing. I was going, okay. So, you know, it's just like he says, well, I set it up any legal purpose. And I go, yep. So, you know. And my thing with naming things after street names, this is early, I guess, in my career, you know, I saw that a lot. And I went, no, that's pretty cool. And then I started thinking about it. I said, and the first time I bought a property that I was going to flip, I'm going, but I'm not going to shut this LLC down. I don't need to keep it. So I don't want to name it after a property I no longer own, right? So then that's when I started coming up with some of these creative names. And then as I thought more about it and did more things and realized that, you know, we should start naming things that don't say, I own a big asset, you can either come sue me. And so that's when I started coming up with the weird names.
I too like using foreign languages in my business names. It makes it fun because there could be hidden meaning behind the names that people don't even realize.
Right, unless they're from that country.
Yeah.
So I've had clients I've mentioned that to, and one client, his wife was from Nepal. So all of a sudden we're setting up these Nepalese names. I have a client that's from Sweden, you know, doing the same thing. Yeah, it's like, and you know, I had a client and we were setting up an LLC in Florida. I said, oh, let's use Spanish. No, bad things. Every word in Spanish is already taken in Florida. Yeah. So we use German. No German words in Florida. No, I'm just kidding. There were that many, but I could find more, right? And it's like, yeah, but I like using phrases. You know, you just use a phrase, and it's just multiple words, and everyone looks at it going, what the hell is that?
You're not marketing it.
No, you're not marketing it, so it doesn't really matter. So yeah, so that's...
We had one day, all right, so it was Wolfpack was the LLC, and we were coming up with another one. and we found an anagram that was Paul Flock, which is kind of the same thing. The same exact letters.
Yeah.
We were like, I'll be damned, use that.
That's great.
Yeah, no, that's cool. Any way to come up with a cool name. I like having fun with that.
That's the fun part.
Yeah, one thing I didn't mention is like
Now you just throw in a ChatGPT and they'll give you 80 of them.
Yeah. ChatGPT is wild. I mean, they'll print you out a logo.
Yeah, I haven't tried using that to come up with some names, but
I played around with it the other day. It was pretty wild.
I do have one thing. I didn't mention this, but I mentioned it in my book, which is pocket LLCs. And I got this idea from years ago. Attorneys in Nevada would set up corporations and not do anything with them. Because when you go public or something, you need an audited financial statement. Well, you can buy one of those LLCs and then go public. I mean, one of those corporations or LLC, you go public and you don't have to file all these audited stuff. You're starting from the scratch, and the SEC will accept that. Or the flip side is you need a company that has a track record. Well, the fact that you started the company 10 years ago and now you're just starting to do business, no one asks you what you did the last 10 years. They just say, when would you start in business? Oh, you incorporated 10 years ago. Wow, most businesses only make it 5 years. I only owned it for 3 months. Yeah. Woo! But that's what they did. So I started creating LLCs for myself that I use for future deals, because a deal will pop up. I'll be in a room like this and someone will say, hey, I got this, or whatever. It's like, it's subject to, or I'll sell it with owner financing. I'm going, let's make it happen. And it's like, but I need an LLC, right? And now, granted, Louisiana and Mississippi, it's pretty quick. I can set one up fast. But if we were doing something in Florida or Texas, it takes a while. So I will have an LLC in the areas where I want to invest already set up. Now, it costs me $30 a year in Louisiana to keep it. I was at a meeting with realtors and we were talking about multiple LLCs, and one guy brought up, I was like, well, you have to pay that $30 every year. I said, well, maybe you should just use one. It's like, if you have a problem paying $30, okay, don't set up another LLC. Yeah.
Do you have a holding company?
Yeah, I have two. I have one for Louisiana and one for Mississippi. So my rentals in each state, that owns LLCs that own the properties. And I do that because if I set up one holding company, I'd be filing that tax return in 2 states, and the states would want me to allocate the income among them, and I'd be paying what I feel is extra tax. So I like to do it so that the tax I owe in Mississippi is just on my Mississippi rentals. And if I have losses on those, I don't owe any tax in Mississippi. But if I filed a tax return holding company with Mississippi and Louisiana rentals, and say Louisiana was making money, Mississippi was losing money, then they want me to allocate that income based on the rents I received, and all of a sudden I'm paying tax in Mississippi, and I'm still paying tax in Louisiana. And so now they'd be average, but they're up until recently their tax rates were pretty close to the same, so it really wouldn't matter. But if it's New York and Louisiana, no. Well, first off, I wouldn't be in New York. Right. But if I inherited something up there, I'd just sell it really fast. But if you're in a high tax state, you don't want to pay higher taxes on your income like that. So I set up a holding company because I've seen that happen so much. So it's like, well, it's just 2 extra LLCs, no big deal. So, now for me, filing an extra tax return is not a problem, right? So I file 2 tax returns, 1 for each holding company. And then, because it's a partnership between me and my wife.
So that holding company has all those LLCs. So you have 20 properties. Each one has its own LLC, and it's all under one holding company. So you only need to do 1
tax return because those LLCs are single member LLCs and they're disregarded. So I don't have to file a separate tax return for them. Now, it turns out that my holding company in Mississippi also is a partner with 2 other people in 2 different properties. So it actually gets K-1s and has rentals itself. So I'm filing multiple LLCs in Mississippi because I'm filing partnership returns with other people. But my holding company it's all rental income, so it's all coming into my holding company.
What's the big advantage of having a holding company?
Well, I only have to file 1 tax return for all my rentals.
Okay.
I can pull the money from all the rentals easier because I can pull it up into the holding company. It's moving money from my LLC that owns a property into my holding company is an owner distribution. Right? It's going to, if I have to move it from Mississippi holding company to Louisiana holding company, I got to pull the money out in my pocket and then put it in the other one. But if I'm just moving money around from the properties in Mississippi, I just have to go up to the holding company and down to the other LLC.
Does that prevent it from being a taxable event versus coming into your pocket?
Well, when it's just an LLC and you don't have a corporation involved and you're not an S corp, you can move. The owner can move money in and out of the company at will.
Okay.
It's considered a capital contribution.
Yeah.
The only time it becomes an issue is really on the corporate side, because you can't really do that, and there's basis limitations. Under the rental side, a basis limitation is where your investment, you only can withdraw up to your investment. On the rental side, we get to count the debt as our investment. So that's how we can end up being upside down by withdrawing. You know, we buy a house for 100K, it's now worth 200K, we go refinance it for 200K, we pay off the old loan from 100K, now I've got 100K of cash I can pull out and I can spend on anything I want. The debt's still on the business, and I have no equity in that property anymore, and the tenant's making that note payment, so everything is okay from the rental side. It's just on the books, it shows I have 100,000 worth of debt, 200,000 worth of debt, 200,000 on property, and I've got zero equity. So it looks like I'm not capitalized. From a tax standpoint, they don't care about that as long as it's financing for the rental property. I get to count that as part of my investment. So when that has a loss, I get to deduct that loss. And then with a corporation, you can't do that. So you have to have investment. Then if you pull money out of a corporation in excess of your basis, it's called a long-term capital gain. You pay tax on it.
Do you put mortgages that you finance on your own properties just to make it look like the properties don't have
I haven't yet.
equity?
I haven't had to do that yet.
Okay.
So that would be a reason why I would set up a Wyoming LLC, is, you know, and then it'll lend to the stuff.
Mm-hmm.
Now the problem with that is that fraud if they find that or whatever, and it's like now you're back to, so it just looks like there's a lien.
Is that fraudulent though?
Well, if you put your own, if you lend money to your company, no, you have all the paperwork. But a mortgage is different than a note, right? A mortgage secures a note.
Right.
But when you pay off that note, the mortgage is still there. You've got to go and actually file a cancellation. But if you never file that cancellation, it just stays in the public record and it's before anyone else. So there's a lot of guys that have mortgages out there, they just never cancel them. Now when they need to refinance, they go cancel them, right? But anyway, if someone ran a search and said, oh, that has this mortgage on it, they don't know what the amount is. Now if you get a call for a payoff, it's like, oh, that's interesting.
Yeah.
Who's wanting to pay off my mortgage?
Yeah, whatever.
So now there are some guys that, and this is a smart thing to do, they'll get options on a property. And options where you pay someone money for the right to buy it at a certain price in the future. That's the simplest. You can get a lot complicated than that. But what they'll do is they'll actually, because an option, you don't really, filing that option in public record doesn't do you any good. Unless you happen to put mortgage at the top or deed of trust. And all you did is change the title, you file an apartment, and everyone sees the title, they give you a call and say, how much is the payoff on this? Ooh, someone's buying my house, well, I have an option on that, let me go find out what's going on.
Another
So-
way for protection to show that same thing where there's maybe a mortgage on it or whatever, is you can attach a master lease with a deed of trust to a property.
Mm-hmm.
And that looks like you're gonna get a call for a payoff if someone were to. So it's another form of protection with all this title fraud and everything.
Well, with leases, you can actually file your lease anyway, and that gives you rights in most states.
If
but-
you attach it,
But if you add a mortgage in there, that's
Or a deed of trust.
that way they won't overlook it,
right.
right? Because sometimes you file a lease, all that gives you is the rights of that lease up to the term of the stuff with the new owner. A mortgage gives you, you get a phone call basically. The idea is to get a phone call so you can be part of the conversation of, wait a minute, you're selling your property?
Yeah.
Let me talk to you about that.
Yeah, John left just a little too soon, huh?
Yeah.
And I found out something the other day, if you have a master lease, you can file that master lease with a deed of trust and you can depreciate it. A 30-year.
If it's a 30-year lease, yes.
30-year lease, you can depreciate it as.
If you bought it.
So can the owner at the same time. Which is mind-blowing. Of course, if you're gonna sell it in the future, you're gonna have to pay, recapture.
Depreciation recapture, yeah.
But you keep it forever,
Yeah, well, I would deduct all the lease payments and then when I buy it, now I depreciate it and starts it all over again.
Right.
Because, you know, if you lease it for 10 years, it'll be almost, you know, it'll be 1/3 depreciated and you don't have that much left. But then if you write off those lease payments, which includes depreciation, then now you get to write off the building again.
Right.
Yeah.
A lot of strategies.